Gamestop.
Gamestop.
One of the most volatile weeks on Wall Street.
Social media average Joes versus big money players.
A David and Goliath struggle.
There was a lot of swings in terms of being happy, and then a lot of very depressing moments.
I saw the numbers go up by the numbers I'd never seen them before in my bank account and go down within 5 minutes.
GameStop in 2018 had a very interesting future outlook. I found an article online based on the future of GameStop and its stock options and what you should or should not do. While I did find it informative, it did have a few particular notes about the store closures and other things as far as what was inside the store and what type of retail they were offering and how it competes with the digital world as far as digital downloads of games versus physical media and gaming. It didn't really touch on a whole lot, so I want to jump a little bit deeper into what the actual projection of what GameStop could have had in 2018. And I also want to talk quite a bit about short trades and how it took a massive turn in the year 2021. The article that I chose to do a real deep dive into was called GameStop's Next Play, Reconfiguring the Value Offering. And while a very large chunk of it does talk about the trends in the video game industry and how they were leaning towards the digital side of things versus physical side of things, I actually thought the article was really well written. Honestly, it's a lot deeper than I had initially thought. It does a lot of anecdotal storytelling in it, which is interesting and entertaining, but not necessarily the most informative. They talk about a guy named Mike who is waiting for his copy of Diablo 4 and how instead of going to the store or sitting in a midnight release, waiting with a bunch of group of people around the block for his game, he will just simply download the game. You can even do things now with the pre-purchase of a digital game, is you can download the game so it's ready on your machine, that once it's available to play, you can go ahead and just play it online. And I like that. I like that they do give good comparisons on how digital sales of games are now starting to beat physical purchase of games and stuff like that. A lot of this research was done in the year 2017 from this article that was released in 2018. The sales continue to decline for physical media on a lot of things. What I don't like, though, and it's interesting how they don't really do a lot of comparisons on the fact that other game retailers seem to be doing fine in the physical world. Places like Target, Best Buy, big box stores continue to grow their video game sections. They continue to grow their video game stores, like more smaller ma and pa type stores are popping up here and there. The brick and mortar video game world is still doing fairly well. It's GameStop itself that is dying, and I wish it would have talked a little bit more in this article, not just necessarily about how GameStop itself, not necessarily how the video game market was leaning towards digital downloads versus physical media. I wish they would have talked more about what was going on with GameStop. The used game market was still heavily in favor here in the GameStop world. Used video games generally are a massive percentage of the sales at GameStop stores. One thing that they really could have talked about more in this article was the fact that GameStop definitely needed to spend more time and focus on their used game market. That's buying in games from the consumers. Say a consumer purchases a game for $60, they beat it in a week or two and they no longer want to continue playing it, for any reason. So they can return it back for a nominal fee. GameStop will pay them $25 to resell it for $40 or something like that used. In the digital world, you really can't do that. A game is $60 on digital. You take it home and you play it, and if you don't want it anymore, tough, you're kind of stuck with it. And so there's a way to forecast that in initially just looking at it. And if GameStop were to definitely take their plan and their game plans as far as being a company that focuses on the buying and reselling of used games, and not to say that they don't already do that, but they could definitely have focused or shifted their focus over to that. So it's something they failed to do, and it definitely could have been something that can help tackle the digital market versus the physical media market. With that 2018 analysis, there was uncertainty in the GameStop market. Stores were closing, gamers were shifting their interests, and they were competing with digital media, and they were also competing with online ordering versus in-store browsing. Why were the stores so dead? Do they need a new product focus? And now, in 2021, shifting forward, what the hell is a short trade? I know before diving into this story about GameStop and the short trading world, I had very little in terms of knowledge about the stock market right now. And that's enough to motivate me to explain research, as this is somewhat of a turning point in world history. First, we need to understand what a short is in trading. A short is when you borrow a stock from a broker and sell it immediately at its current price. Then you hope the stock's price falls so much that you can buy the stock back at a lower price and return the shares you borrowed to the broker, but keeping the difference. So let's say, for example, say I want to short XYZ, which has a current price of $10. I borrow one share and sell it immediately at $10. I have $10 now, but owe my broker the one share I borrowed. Then let's say the price of XYZ drops to, say, $7. I now decide to cover it, buy it back, my short position, and buy one share at $7 and return the one borrowed stock to my broker. See, I made $10 when sold and only had to pay $7 to buy it back lower. So my profit is the $3 difference. But now let's say that instead of the XYZ price dropping to $7, it goes up to, say, $15. I still need to return the one borrowed share of to my broker, except now it's going to cost me more to buy it back. If I buy it back at $15 so we can return the borrowed shares, my losses will be $5 difference between selling it at $10 and rebuying at $15. Since the price can rise indefinitely, my potential losses as a short seller are unlimited. At some point, I have to buy it back to return the shares I borrowed. The more the price rises, the bigger my losses. All right, and now for GameStop. A few weeks ago, on a subreddit, Wall Street Bets, they noticed that a hedge fund had taken a massive amount of short trades against GameStop. They convinced everyone on the thread to join forces and buy as much GameStop stock as possible. This made the price rise, and the hedge fund's short position started to lose billions of dollars. Their losses even surpassed the $13.1 billion that the hedge fund was even worth. Eventually, the hedge fund had to close their short positions and buy all the GameStop stock back at much, much higher prices, sending the price even higher still. This is what you would call a short squeeze. Now that hedge fund is declaring bankruptcy, and the Reddit thread is combing through the hedge funds with massive short exposure so they can short squeeze them into bankruptcy as well. All of Wall Street is saying that the public joining together in this fashion should be illegal, but really, they just lost at their own game to the masses. Obviously, nobody could have predicted that this short trading fiasco would have came up and GameStop stocks would have fluctuated all the way up to $150 per share. There's no way. I'm not saying that this article didn't have a good idea of where GameStop was going, because GameStop, it was influenced in a way to kind of shake up the market. Their stocks aren't rising because the company's doing better. Their stocks aren't rising because they've figured out something and have taken the world by storm and are back. I mean, it won't be too much longer, in my personal professional opinion, that GameStop will go the way of a Blockbuster Video. But this article, the workings that we looked through with the GameStop's next big play, written by Aaron Bass, Aaron G. Plegancool, Christopher Winchester, and Thomas West, really did enough to just kind of say what everyone was expecting them to say. It was going down. The percentage of the profits fell 16%, then it was down 12%, and then it continued to go down. And they didn't really give a whole lot of information about why they predicted that, other than to give information about how the stocks were falling and that digital media was the way to go into the future. GameStop made enough, they made enough mistakes in their own history that GameStop themselves made enough historical mistakes that they really crippled themselves. They have spent infinite time with spending little to nothing on buying back used video games. Their used game market is a massive market for sure. They'll sell a game for $60 brand new, and then someone can turn around and sell it back to the company, and they give them next to nothing for it. GameStop sits on loads and loads of stock and doesn't have any idea of how to move it, and they have no idea how to get rid of it and return it back into the masses. There's mistakes all over the place. They made their employees more robotic than anything. They didn't really hire people that were knowledgeable about the products that they're selling. They're more or less turning into a video store, rental store, with just having employees that are hardworking, yet they don't necessarily know the products themselves. What I thought was really interesting and actually very informative about this article, though, was the history of GameStop. They gave an overview of their brief history, and that goes all the way to Babbage's, which was their initial name in 1984, how they became the NeoStar Retail Group, and then Badges, etc., along with Software, etc., and the history of that. I really thought that was very interesting. They all kind of merged together between Babbage's and Software, etc., and they wound up changing the name to GameStop. I remember initially, and this is kind of just my own little gripe, but I remember initially hating that they changed their name from Software, etc. to GameStop. And my joke that went along with that was, why have a store that tells you to stop on the entrance? Because I wasn't going to come in there. I get it. It's like a quick stop, or like, hey, we're going to go for a quick GameStop. I get it. But still, it had the word stop in it. I didn't like it. That's my own personal gripe. When the short bet situation was happening and stocks for GameStop began to rise, a trading app called Robinhood decided to block the ability to buy and sell GameStop stocks. And the hate for Robinhood continues after it decided to freeze trades for GameStop last Thursday, when Wall Street was in a frenzy for the video games retailer's stock. The popular trading app was one of the primary tools for individual investors who jumped onto the GameStop roller coaster, which sent stocks up by more than 14,300% last week. But it has since plummeted to less than $53 as of Thursday's closing bell. As much as Robinhood contributed to the stock's gain, it also drew flack from its users, Wall Street, and the U.S. government for how it handled the activity. Robinhood played a critical role when a group of Reddit posters saw an opportunity to make money while also giving a jab to the Wall Street and hedge funds. However, Robinhood then slowed the stratosphere rise in GameStop and other companies when it restricted users from buying certain stocks. It reversed that decision the next day and posted on its blog about what happened in all that stock trading. So in short, regulations required it to have a certain amount of money on hand to cover stock trades, and it simply didn't have enough at the time. While Robinhood users are able to trade stocks of GameStop and other companies with volatile prices, there are still questions about the events of last week, including whether something like that will happen again. So now we come to the conclusion. What are my thoughts on the original article? I thought it was a very interesting take, a very interesting look at how to project GameStop's future. I thought they did a very interesting and entertaining anecdotal review of a guy who was waiting for his games on the midnight release, and how he, instead of going to the store and waiting in line, he went and bought a game on digital for the same price in the comfort of his own home. I mean, I get it. It was very interesting. I liked the way it was written. It was a good article. However, obviously it was off on its original predictions. No one could have predicted the Wall Street bets and the short trading fiasco happening for GameStop and its stocks rising 14,000%. Nobody could have said that was going to happen. It's just ridiculous to think that. But I do think that the original article could have focused a little bit less on the fact that digital marketing and digital gaming was the way of the trend of the future, because GameStop is just one business. It's not the number one retailer of video games in the entire world. There are other multitude of video game stores and other ways to get video games that are doing just fine still in the video game market. Video games retailers that are selling physical games are flourishing still to this day. With brick and mortar style stores or even online shops. GameStop does both. There's no reason it should be dying. I think, in my own personal opinion about GameStop, that if they had knowledgeable employees, if they worked harder on making sure that they were focusing more on the used game market, if they were focusing more on making the attraction of physical gaming in their store to be more of a primary focus, those are the types of things that could really have helped GameStop. can they be repaired? Can it come back to its glory of how it was 10, 15 years ago? I'm not sure, and I'm not certain of that either. I don't think my opinion of this projection of what next steps are for the future, or not next step, but the next play of GameStop, if you will. I don't know if my opinion of it would be really all that much different than what they actually projected. However, I think that a little more information could have definitely helped us out in deciding that for ourselves.